Last time I come on the show, I said that the dollar is going to be between 100 and 105, and yet we just see this breakout to 106. And naturally enough, gold and silver, experience a correction on the other side.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today joined by my dear friend John Lee as we going to dig into a lot of economic topics. Of course, we will be focused on the silver market, talk some gold, although many unusual things happening around the world in a variety of the different markets. So we will touch on the dollar, interest rates, and a whole bunch of other things. Hoping we'll get some comments. John, I know, is actively involved in real estate as well, which has been a bit the confusing market over this past year and a half, especially with the high mortgage rates, yet prices continuing to go up. So we'll dig into that as well. But before we get started, John, pleasure to have you back on the show. Been a couple months, and we'll have some things to touch on, some of the things you said back in May and how they progressed since then. But how are you doing today, my friend?
Doing well, Chris. Good to see you again. Time flies. It's been almost 6 months already. Yeah, 4 months.
Yeah, it's already a couple months have gone by. You've been traveling around the world. I've been out of Mexico into the U.S. and somehow the silver price seems to be stuck in a similar range. Although it's interesting, I was reviewing our last call, and back then we had just under $26 silver. I think gold was slightly over $2,000, and I will pull up our chart from today. We're recording on Tuesday, September 26th. This will air on Wednesday, but seen a bit of a sell-off so far this week in the silver market, plunged down lower yesterday, trading a little bit lower today. Hearing a lot of comments from bankers, commercial bankers like Jamie Dimon, as well as central bankers, Neil Kashkari today, talking about the possibility of higher rates. And meanwhile, we have silver now at the lower end of this range it's been in since, let's call it March, before you had banking issues, get up to $26. And I believe it may have been right around there when we talked. Either case, thoughts on where we stand today in silver? Seems like it's hovering around that range, waiting for some sort of clarity out of the Fed of when we're going to be done hiking rates. But what would you say about what we've seen over these past couple months since we last talked?
Yeah, the gold and silver prices are, at least on a short-term, week-to-week or day-to-day basis, largely driven by direction of the dollar. So, Chris, last time I came on the show, I sort of postulated the dollar. I didn't say I was not a dollar bear, given dollar is the sort of the king of the fiat currency, and there needs that the power that be need to have some sort of normalcy and try to keep the reserve currency moving along. So I said that the dollar is going to be between 100 and 105, and yet we just see this breakout to 106. And naturally enough, gold and silver, experience a correction on the other side. Right now, where we're at is the dollar is broken up to the upside over 105, so it could continue to rally to close to 110 possibly. And right now, gold and silver are at this very strong support level, 200-day moving average. Silver is about 2330-ish, and the gold is about 1930. So I think the judge is out. Whether the metals are going to correct below those very strong support levels, I don't know. But even if gold and silver were to correct below the 200-day moving average, it will be temporary until the dollar until the dollar rally run out of steam.
Yeah, and John, something that I get it sometimes, silver investors, whether they watch the show or elsewhere, don't like hearing, if silver goes up a little bit or thinking about where we were last year. Although interesting, here you see July 13th below 100, up to 106, as you pointed out today. And you look at the silver price, here we go on
25.
16th.
Yes.
So 24, 30-ish. Would you say to some degree, given that we've had rates continue to go up, they came out last week, said we're still, the cuts are nowhere in the future. They reduced their dot plot for next year, 2 cuts instead of 4. I mean, in some ways, given the way these things trade, would you say it's not really the worst thing in the world that silver's sitting at 23.14 today, given the environment that we've had over these past couple of months?
I absolutely agree with you. The gold and silver are actually acting very strongly at the backdrop of a strong dollar. In fact, if we look at well, the dollar, last time the dollar was 106 back in around November 2022, March 2023. Gold was below 1980 and silver was below $20. Can you see that around 106? That's around November, October-ish, right, of 2022, and towards around early part of 2023. Gold was 1980 and silver was just over $20. And what we're looking at is, in a way, you can think of the currency game of traders that are rotating back and forth between euros and
John, if I excuse me for interrupting a second, although back in, as you point out, here we have
1920,
106 in November of 2022. Gold was actually even quite a bit lower. You see, we're back
1800.
1800.
There you go. That's that's exactly the point I'm making. Don't be distracted by, some people say, oh my God, the dollar, I'm bull on the dollar, so I'm bearish on gold. Think of a rising dollar as an opportunity to accumulate, especially at this 200-day moving average level, which is a very, very strong support level. And what's happening is the day-to-day storyline, the Fed say this, JB Diamond says that, the ECB says this. It's just a distraction for the traders to stay within this realm of currency arbitrage. But over time, you're going to have leakage and spillage of this money going into gold and silver. And the power that be, their mandate and their objective is to minimize that leakage, right? That spillage into gold and silver. But having said, a lot of, we have a lot of bears that are giving up on gold and silver on a daily basis from talking to elephant shareholders. Keep in mind that we're about $50, $40 from pushing that all important $2,000 level, resistance level. And for silver, it seems like there's a lid on the $25 level, but once the $25 level is taken out, there's not going to be a whole lot of trading needed or volume needed to challenge the $28 level. So in a way, you see that the cartels are working overtime to put a lid on these critical resistance levels, all-time high levels, and we're not that far from it. And then I would say the dollar probably got another 4 to 6 weeks of strength, if at that. And from that point, and gold and silver is known to running ahead of that, right? So I still stick to my gun, Chris, which is 2,000 for gold and $28 for silver this year. It's not playing out exactly according to script, given that we're towards the end of September, but we still have October, November, and Christmas, over 3 months to come. And it would not take a whole lot. Remember also, Chris, that I think in 2020 or 2021, silver went from $14 to $30 in a span of 3 weeks. So it wouldn't take a whole lot for gold and silver to catch up.
Well, they certainly move quick when they finally do. And as you talked about, some of the great leaders we have running the show these days, I wanted to pull this one up. I know she is one of your favorites, but interesting comments from Janet Yellen this week, where she says, well, we'll just let you hear for yourself, and then you can comment on this one.
I don't see any signs that the economy is at risk of a downturn. And this is the best of all worlds, to see continued strength in the economy, a good, strong labor market, and inflation moving down. And that is what we're seeing.
Do you have a time frame in mind of when we might see that peak lag?
So she doesn't see any signs of a downturn. I have my notes here where I look at the ISM PPI below 50 consistently, manufacturing PMI below 50, ISM services. That one's actually above 50 in positive territory. Philadelphia Fed was out this morning, negative numbers. Do you see any signs that a recession is in our future, John? Or what would you say about Janet's comments there?
Well, Janet has to say that in order to build the construct for much higher interest rates to come, which is what I have been telegraphing for the last 2 years. And Chris, I was on the show in early 2022, pounding the table when 10-year was less than 2%. That 10-year is going to go a lot higher. Now the 10-year is close to 5%. The only way to justify continued rising rates is they have to say that economies are not in recession. Otherwise, they have to lower rates. Then they have to continue to beating the drum on inflation, even though there are a lot of signs that deflation is taking place in price decreases. But they cannot say that, right? They have to mask that. So it's entirely natural that these politicians are sticking with the script that's being fed to them. Remember this Kalikari guy out of Minnesota or Wisconsin? 2 years ago, he was the biggest, he was the dovish guy that there is. And now he's, one of the most hawkish guy. And then one other note, Chris, is if you look at today's oil at $90, oil was hovering around 80 to 120 from 2011 to 2014. And that was when interest rate, the Fed funds were the lowest in history. The Fed funds rate was held under 1% for that 4 or 5 years in question. So, and now oil is back to where, and oil touches all facets of our daily lives. I wouldn't take the CPI or PPI or ISMI numbers. I used to follow them, the likes of David Rosenberg and a lot of the well-known economists. Sometimes, it's tail wagging the dog or dog wagging the tail, and none of them make any sense to me. So now I don't even sort of read much into those numbers nowadays. And you talk about recession as being 2 consecutive negative GDP growth. Well, how do you measure GDP, right? That in itself is a long chapters we can go into for over a beer. But I think in the end, Chris, the takeaway, if I can share with your audience, is now is not the time to go hero. I'm winding down some of my real estate investments depending on geographical locations, and winding, like even for Silver Elephant, we're shedding some assets or non-core assets. Now it's time to deleverage because the rates are going to go a lot higher. There's no question in my mind. And what you hear on a daily basis are set out to confuse you. The markets are laggard. Chris, they cannot have this kind of knee jerk, right? If the Fed comes tomorrow and say that the Fed's going to go to 6%, Chris, the stock market is going to crash tomorrow because they're going to have to adjust for yields. So in a way, they have to leave the ends on that frying pan and the turn of the temperature up and down. But make no mistake, the trends for interest rate is going to go a lot higher. Even despite the pushbacks from the CalPERS and from the pension funds are upside down in their treasury holdings and in their equity positions, the rates are going to go higher. And the reason for that is to achieve the 2030 agenda of own nothing and be happy.
Yeah, and John, you talked about that last time you were on the show, where you said back then that you thought rates were going higher, and we were back around the 3.5 level. So indeed, you've turned out to be correct. Interesting. Jamie Dimon had some commentary this morning where he was speculating how things might react at 7% Fed funds rate, which a little scary to imagine some of the economic structures if that does indeed become a reality. Although you wonder and you pointed out with the higher oil price, and now I think we're not particularly either large fans of the government inflation data, but to the degree that they're looking at it and putting it over the media, we saw the numbers tick up the last month. And as you said, oil affecting everything. So where do you see that going from here? It doesn't seem like, at least based on what we see on the surface, that the Fed is really left in an easy position. I mean, what are they supposed to do when you start seeing inflation tick back up? Kind of hard for them to come out and say they're going to lower rates anytime soon.
Chris, the guy that runs the Fed and the guys that publish these inflation numbers are guys, the right hand talking to the left hand. So the numbers could be high, could be low. Same with Jamie Dimon's statement. You got to have a bear and a bull just to create that little bit of attention. And as I said, Chris, I was in Japan just 2 weeks ago, and I was in many parts of the world. I was in Asia. I was in Europe. I definitely are seeing the cooling of the economy, and that even in Vancouver now they're giving discounts on Uber rides. Taxi rides are, prices are down 30% from it was just 4 months ago with the coupons, and you're seeing a lot of happy hour specials everywhere. So you're definitely seeing cracks in the lack of demand because the prices are too high. But again, Chris, it's not going to deter the Fed from raising rates higher. And the logic on that is not data driven. It's ideologically, it's ideal driven, which is they want the disappearing middle class and have a two-tier class system of the well-to-dos, and the ones that are all nothing and be happy. That is really the bottom line, Chris.
It does seem that way. Although, with all of that said, what do you see for silver? Again, you talked about perhaps hitting that $28 level later this year, but maybe if we look at the medium or long term, how is this going to impact the silver market? Also would like to touch on maybe the answer to the first one, because we do have what seems like a lack of investment capital going into silver right now, but some contrasting factors, shall we say. And if we do see rates continue to rise higher, is that going to be trouble for silver, or where do you see that going?
Yeah, Chris, right now the silver and gold market are decoupling from a lot of the different sort of variables that we're tracking. Like, for example, silver used to track quite well with oil and NASDAQ even, because it's liquidity driven. But silver is a laggard, same as gold. There's definitely not a lot of speculative fraud in these markets, especially witnessing the mining companies, big and up and down, large and small. First Majestic is trading at multi-year low. It's broken down, and the juniors are completely going through this nausea phase of almost zero interest whatsoever. I think right now, you never know though, Chris, what's going to drive the market going forward, metals market, because the fundamentals are so strong. And the only way, the way I look at it, the only way for the agenda to be pushed forward, to keep the plan moving along, to continue the deficit spending, and to sort of keeping the lid of all the problems under the lid, is to have a benign, a nonsensical, a low profile gold and silver price. That has to be front and center, forefront check mark for the guys that are running the show. And that's why you're seeing such concerted, heavy-handed price management. Chris, you remember back in the days, 5 years ago, every now and then you have a Friday dump, right? And now it's almost like now you have a Friday relief. You have a Monday to Thursday managing, and then you have a Friday relief almost. So I don't see that letting down, because so much is at stake to execute their century-long planned program. So all I can say is, with the digital currency, with a lot of different mandates that's happening, with the mobility of money being restricted more and more on a daily basis, the amount of international wire being questioned, withheld, getting smaller and smaller. We know that because we do a lot of international commerce. So I would recommend, encourage, and highly sort of recommend. Myself, as I mentioned to you also in May, we bought gold for the first time in 20 years. We started buying silver 15 years ago, and we bought quite a lot of gold when gold was 1850, and now now the market's affording you another opportunity to accumulate the physical metal, that they're available, first of all, and secondly, they're trading at not so high the premium as to the physical that you can acquire. And I would continue to recommend that. I would not look at your net real wealth being measured in dollars and appreciation in dollar terms. Right now, it's a way to now it's conservation mode. It's, with all the craziness in the world right now, is making sure your wealth don't disappear or confiscated or blocked or unable to transact. It's about accumulating gold and silver. It's going to be hovering around this 200-day moving average. And if dollar were to make an attempt to go up to 110, you might see a brief dip of silver at $22 level. I don't say go down below 20. And conversely, for gold, I don't see it go down below 1850 for any amount of time, while the 200-day average continued to move up. And so now it's a good time to accumulate. That's sort of the way I look at it, Chris.
Yeah, and in the background of everything that you mentioned there, we have the whole thing with the BRICS and de-dollarization going on around the world. Obviously, you're traveling quite a bit. I'm curious some of the different places you go, and I see you shaking your head there. What do you hear outside of the US in terms of some of those trends that have been going on?
I don't buy it at all, Chris. I talked about it in May, and also maybe a couple of other channels. Um, if the Indians don't trust the Americans with the dollar, you think they would trust the Chinese with the renminbi, right? And then same with Brazil. Would they trust the Indians to come to a consensus on what to print, where to print, how much can be printed? I don't think, as I said, they will even agree on a time zone to hold such meetings on how they can settle their trades. So, and that only builds even a more bullish case for gold and silver moving forward. You cannot, it's the whole reason the dollar is created and the president was created is to have the hegemony of a currency. And given the size of these different fractured economies, I don't see them coming to consensus at all of a new currency away from the dollar. So I don't see any difference at all. Like when I was in Europe, I actually see more centralized currency, right? Like I was in Croatia. Croatia is now adopting the euro. Turkey is moving towards the euro, and Asia in large part are going with the dollar. So I don't see any new currencies coming on the horizon. That's not what I see, Chris.
Not necessarily whether there's a new currency, but just the degree to which it seems like trade deals are being done that increasingly don't involve the dollar. And I get what you're saying, because you say people don't trust the dollar. Do they trust what the Chinese central bank is doing? And I think that's a fair point, although the degree to which gold can be used as a settlement mechanism, and something that we had heard speculation about at the BRICS meeting, did not, no formal overt announcements, but just the degree to which you could have some of these trade imbalances settled with gold. And it sounds like you don't see that.
Oh, Chris, soon as the country choose gold currency, and and not just some fiat instrument, some fiat ETF that actually have gold in the vault to back their currency, you're gonna have the feds raining down. You're gonna have the warships circling the country. It's not to be, because as I said, this is a century-long program that they are approaching the final chapter by 2030. They cannot have one of those countries, rogue country, sort of stray away from the wolf pack. And Chris, and if you look at say India and do business with China, like if they were to settle a currency outside of the dollar, all that meant was, Chris, that India is going to have central bank opens a account with China central bank, and they will be swapping currencies on trades. If they happen to net out in terms of the trade surpluses, then they're, at the end of the day, nobody owns, right, the Indian rupee or Chinese renminbi. But rest assured, Chris, when one country has an imbalance and are start accumulating sort of the other guy's currency, they're not going to sit on that currency for too long. They're going to cash out. Like, for example, if Indian is gotten too much Japanese yen, India is going to cash out the yen and go something else. They could be buying gold secretly, possible, but that would not be made in a sort of an obvious way, right? It would be made more opaque. But I don't see. And then what now, right? So India is going to have a currency with a Brazil real, and then Japanese yen, and then the Korean won, and the Hong Kong dollar, and then the Russian rubles. I mean, it's going to be a nightmare in the making, Chris. And that's why gold is there in the first place. But unfortunately, I don't see gold play a central role in that either, because of the power that being the cartel is going to have a very heavy hand in making sure that scenario will not materialize or happen.
Although I suppose effectively, it sounds like we're not saying something entirely dissimilar, where you talk about them selling the yen to buy gold. So essentially, whether it's formalized or not formalized, reaching the same endpoint. Although, John, the last thing, as I mentioned before, did want to touch on. I was reading an article, interesting the way they phrased it, that we're seeing a prolonged absence of capital expenditure in silver. Obviously, you touched on how junior market in particular, not seeing money come in there. The shares down quite a bit. Same with on the senior side and production companies as well. Do you think we run into an issue at some point going forward? Because especially with the idea of making the world increasingly green, seems like now would be the time where you need to be ramping up production on silver as well as a whole host of other metals. But what could you say, as especially you're on the front lines of that part of the market?
Yeah, Chris, we're looking at the economy of a dilemma of or a struggle or imbalance or economics 101. Is you have supply, you have a demand destruction right now, and then you at the same time you have supply disruption. Nobody's gonna spend $4 billion. It used to be $1 billion in put a copper open pit project in Peru to production. Now it's gonna probably cost you $3 billion. And used to take about 2 years. Now it's going to take about 5 years. And if you add the amount of time that permitting it's going to take, it's going to be a decade from the point of a discovery to getting a mine into production, if at that. And the cost of capital has also gone up. If we're to go LIBOR plus 5, all the economics thrown out of the window. When used to be the days you can finance a project with 70%, 80% debt at LIBOR plus 1, which is 2%. Now to finance a mine with debts, you're looking at interest rates at least double digit. And so a lot of the variables are gone, which means that the supply is going to be throttled. But unfortunately, on the other side, demand is also evaporating and collapsing in record time. And that is my view, and that's through my traveling anecdotal evidence. When I was in Japan, in Tokyo, several of the 24-hour venues that I visited, they're not even open every day. They close at 11. And the flights that I take, the frequency of the flights and the occupancy of the flights I'm seeing demand destruction, Chris. The dynamics, how they play out, depending on which one is going faster. So you're going to see a lot of volatility in the market, whereas supply being withdrawn from the market, but the demand is collapsing as well. So so the whole thing is sort of are coming down. However, I think in the end, at the same time, also gold and silver has got that industrial and investment element to it. But in terms of the base metals and oil, I don't see collapsing of these commodities, but rather I see them hovering around these levels, and they could go up and it could go down maybe at around this level. But where I think what's going to drive gold and silver going forward is going to be not investment demand. It's not going to be so much on the industrial demand, which would be lackluster. And like, for example, if you look at nickel, that's another good example, right? With such a rapid adoption of the EVs, and yet nickel prices are back to where they started 2 years ago before the run up in 2022. I see that gold and silver principal driver, that's going to be investment demand. And the investment demand, Chris, part of that is, like you said, the U.S. Treasury is not as attractive as it once were, even though it's yielding a lot higher than even though it's yielding a lot higher than it once were, because of this geopolitics. A lot of guys just don't want to be holding U.S. Treasury. Doesn't matter what. The Russians certainly don't want it. The Chinese certainly don't want it. The Brazilian, depending on the time of the day, their relationship with the U.S. is unrocky. On the old footing. So a lot, and their Saudis, and you collectively looking at a few $1 trillion. They're not going to be settling on the U.S. Treasury. So the fundamental for gold and silver is very, very strong. And it's just a matter of when that rally is going to be ignited. And so long as the gold and silver stay above that $200 moving average and inching towards challenging all-time resistance, $2,000 for gold and around $28 for silver, then you're going to see some major sparks, major fireworks. I still anticipate a good run up this year, but yet it's the judge is out to be seen. But in the end, Chris, you are not being in the market for 20 years. There's been a lot of easier ways to make money, a lot less headaches. But here we are, we're being here for 20 years. What's the extra 1 or 2 years? you're gonna spell out, right? Keeping good health, and then sit by the side, and then watch the events unfold. But I'm very, very confident that these critical resistance level will be overcome in the short horizon. If not this year, maybe before PDAC May next year. Chris.
Well, that makes enough sense. And perhaps one thing that I don't know if this should give people comfort. I mean, when we saw that banking issues earlier this year was quite a surge in gold and silver. We saw that even reflected in the COMEX price, as well as retail activity that was going on with physical gold and silver. And obviously, we've talked quite a bit in the last half hour about different conditions that Janet Yellen's thoughts aside seem to be concerning a lot of other people, including IMF was out warning about banking issues last week. Bob Michel from JP Morgan, we talked about one of his comments the week before that. So again, I don't know if it's comforting if we have chaos in the banking sector, but at least to gold and silver investors that we saw that the metals did still respond. And certainly with, in my opinion, some factors indicating we have not seen the end of that. I think makes sense along with what you're saying. So
Chris, the house is on fire. You remember back in the days when Kim Jong-un of North Korea fired a missile in the water and then gold went up $50? And now you have a full-fledged war, proxy war going on between Ukraine and in Ukraine, where hundreds of people or thousands of people die on the monthly basis. Here, everybody going on its business like there's nothing happening, right? But the Rome is on fire, Chris. Same with the banking. I think right now it's just a lot of that psychological managing with the baby, with the millennials and with the new breed on Wall Street that never really seen any real sort of events or not being taught in this new neon monetary policy. You remember back in the days, the MMT and whatever is all made up. And a lot of that is just a psychological and sort of price management. And like you said, all these accidents happen, and the cartels are sort of crossing their fingers, hoping that the demand and the volume will cede, of which they're going to pick away on this COMEX, right? Like we talked about. They might even fuel the fire just to exhaust the buying. And from there, they're going to pick away on the market. The banks, let me just share with you quickly. Chris, my view is in 5 years' time, maybe less, the banks will be consolidated because the role of commercial banks are by and large serve their purpose. They have no utilities anymore with the advance of digital currency. The Fed, you only need one bank. They can manage it all digitally. You don't need branches. You don't need ATMs. The banks, majority of the banks will be gone, Chris. And consolidation already started taking place. Lehman Brothers gone, UBS and Deutsche Bank. All these things are not happening by accident. I think it's the central banks are withdrawing liquidity from the weaker players, and eventually the banks will be all consolidated. They serve their purpose. They're gonna get a thank you on a pat on the back, and then they are not needed anymore.
Yeah, well, we're seeing it play out, and especially if Jamie Dimon turns out to be right about 7% interest rates, or Neil Kashkari, or some of the other speakers we see out there. I don't think we need to necessarily get to 7% to see some of these issues come back. In fact, I had pulled up briefly while you were speaking before how seeing bankruptcies at levels that match what we saw in 2008, 2020. So
the Rome is on fire, and Yellen is saying that the economy is very robust. I was watching another show say that the automobile repos are all-time high, right? Again, everything's fine. Shoe's going to drop, Chris. The question is, how is the public going to react, right? Again, a lot of that is psychological. In the end, the other central banks and the government's going to divest into gold. A lot of the well-to-dos, Elon Musk, going down the ladder, the centi-billionaire, the billionaires, the centi-millionaires, they're not going to put up with this digital currencies, and they're going to have their say in how they want to spend their money. And the only way to do that is to accumulate physicals. Chris, there's no other way. There's no other way.
Well, I hear you. That's why we continue to talk about these things here, and we'll see how it all unfolds. But at least that's what I'm seeing. That is also what John Lee is seeing. And John, before we wrap up, though, would love to hear an update. I know you have a new deal that you guys just signed at Silver Elephant, and perhaps you could just walk folks through the latest news that you guys have coming out.
We are going to see continued volatilities, even though I'm very bullish of gold and silver at these levels, which are very strong support at 200-day moving average, and we are approaching on all-time resistance level, reestablishing all-time high. But the company's adopting a very cautious approach. We're trying to minimize dilution. We raised quite a bit of money, just over $1 million, and we took a hit on shares issuance. But we really try to minimize additional share issuance and dilution because of the uncertainties. And we just announced 2 weeks ago, we struck a deal with Indian Precious Metals, which has a processing facility for the silver resource that our flagship project, Pulacayo, has in the ground. So India is going to pay Silver Elephant $5 million over the next 16 months. $3 million will be paid. $1.2 million you already paid, and another $1.8 million in January, $1.8 million US. So altogether, we're going to get about close to $5 million by January, 4 months from now. And what's happening is the company is organizing a trucking and shovel operation to deliver the resource, the rocks. We don't call it ore, but the rocks into Indian Precious Metals facility about 180 kilometers away. The average grade, I mean, Chris, I heard that you recently visited Fortuna Silver, so you kind of well-versed into the silver industry now. The average grade of our oxide resource on the near surface is over 200 grams, close to 200 grams. And Indian Precious Metal is processing right now at around 100 to 120. We see this as a win-win situation where Indian write us a check prepaid, and they reimburse us for the operating expenses. But what this means for Indian is they're gonna, potentially significantly increase their feed grade and also their production and also their cash flow. And at the same time, with the cash flow coming in from Indian Precious Metals, Silver Elephant is managing our cash flow carefully, and we're not anticipating to having to raise money for 2024. So we see this really as a win-win situation. And one last point, Chris, is that in terms of valuation, India is looking to extract probably around 5 million ounces of silver oxide in the next 2 to 5 years. The majority of that in probably the first 2 years. So in a way, they're paying Silver Elephant $1 an ounce. And right now, Silver Elephant has 100 million ounces of silver in the ground, and we're trading at $10 million market cap. So we're right now being valued at 10 cents per ounce in the ground. And Indian is proving that our resources are worth a lot more than that, and they're paying us 10 times the valuation, which is $1 an ounce in the ground. And after the oxide layer is removed by Indian, the company will be studying to erect and to build a processing facility for the sulfide operation, which is majority of our resource that's just beneath the oxide layer.
Yeah, it sounded like a good deal where you have a good partner not too far away. I believe it's 180 kilometers. And also there was an escalator in there, which perhaps you could walk us through, where if silver gets to 28 and 32, there's an additional payment.
Right. We got a bit of we're in the publicly listed, we're in the public trading business. You gotta have a thick skin to run a mining company. You can never please everybody. So we didn't really give the farm. Well, first of all, we only gave away 6% of our resource, which is a small percentage. But even that, if we have 2 escalators, if silver goes to $28 for 250 days, and we get another $1 million US. And if silver goes to $32 for 150 days, then we get another $1 million US. So I think we got a good upfront payment. We could get a lot more if we were to truck them a batch at the time and getting the real spot silver price. But then there's risk. There are a lot of different risks associated with it. So we really sort of carefully thought through and opt to receive upfront payment with these accelerator kickers. Not the best of leverage, but we still retain a bit of upside, Chris, for our shareholders.
All right. And you also recently announced the sale of the Titan Vanadium Titanium project to Cache Gold Mines. And perhaps you could just give us a quick update on that one as well.
Yeah, that's a project been sitting we like that project a lot, and we have this couple of group that came to us, and Cache Gold run by Alex, and a absolute fantastic guy, professional deal with as with NDMI precious metals. So we divested this project. We got about $230,000 in cash and 99% shares in Cache, which is a private company. They look to go public in the next 18 months. It's a Vanadium project. It's a good jurisdiction. There's a lot of exploration potential, a very decent grade. And I'm very confident Cache, led by Alex, is going to do some good numbers on this project going forward. And also it fits into the theme, mandated by the Silver Elephant board, which is minimize dilution, divest non-core assets, and focus on the project that are near-term cash flow of which you can deliver, as in the case of Pulukayo. And also in the case of coal, the project just got the environmental renewal, and we're talking to a very big buyer, of which we're discussing price for coal right now, of which potentially could put the mine back into production this year and generate, we're looking at potentially $100,000-$200,000 US net from our Mongolian operation, which is just going to sort of provide further reassurance to our shareholders that we don't have another shoe to drop, Chris. I think we're in a very good situation compared to a lot of other juniors that are bleeding cash, or producing at a loss, and they're in the dilemma of whether to shut down the mine and could potentially have some local community upheaval. But for us, I think we're really in a very good position. And also, Chris, I just want to emphasize that we have a very strong local community support, and putting those mines for coal and silver into production just going to demonstrate that we're in a jurisdiction and neighborhood that are very supportive of our endeavor, and that we have a good relationship should we want to expand our operations in the future.
Yeah, it makes sense what you're saying. We're certainly not the ideal environment to be diluting. So good to see that you have some cash flow coming in from some of the assets. And John, perhaps you could just let folks know where they can find you. What's the best way to get in contact, and anything else you'd like to pass along today?
Chris, it's so good to catch up with you. And I'm reaching out to some of my people I haven't talked to for a long time to make sure they're in good order. This is a crazy world out there. You can get hold of me on Twitter. Just search John Lee Silver Elephant. And you can get hold of me, JLEE, at silverelephant.com, or visit our homepage, silverelephant.com. And Chris, I just want to assure our shareholders and your audience that the company is in good order. All our assets are in good standing. We have good relationship with our local communities. We don't have debt. Unfortunately, Chris, interestingly, we're in an industry that requires some of the longest patience, because the mine takes forever to build. But yet some of the investors has the least, has the shortest fuse. So, our stock is a shadow of its former self. We're trading at 10 cents on the dollar, but I want to assure our shareholders, like Warren Buffett said, if you want to buy the burger, you want to buy when it's cheap, not when it's expensive. And we look forward to continue to provide updates to our shareholders, and feel free to reach out to me and schedule a call if you like. Looking forward to making a few more friends, and then have you come on board and come along for the ride. I think the next 6 months, invariably we're going to see something drop, and of which is gonna bolster gold and silver prices, and maybe nothing happens, and maybe prices is going to move by itself, because you never know the principal drivers or the catalyst, only in hindsight.
Well, certainly a lot to keep an eye on out there, and appreciate you walking us through a lot of the economics you're looking at, as well as an update on Silver Elephant. I will have the links to both John's Twitter page and the website below, so folks would like to reach out and contact him and certainly find out more about Silver Elephant mining, just check the description field. And John, with that said, we'll wrap up for today, but pleasure as always to see you again. And who knows what we'll be seeing in the next couple of months, but great to catch up with you, and we'll have to do this again soon.
Stay in touch. Thank you.